Hello, good afternoon. Welcome to MF Corner on CNBC TV 18. I'm Vinnii Motiwala. Thank you so much, as always, for tuning in. Now, back with our Know Your CIO show, where we talk about how fund managers, how CIOs actually navigate different market cycles. How do they generate alpha? What strategies do they follow on the back for their investments? What growth strategy is best for investors to generate long-term wealth as well? And this time around, we have with us Nimesh Chandan, Chief Investment Officer at Bajaj Finserv AMC, to understand their investment styles, to understand how they go about it as well. Nimesh, good afternoon, and thank you so much for joining us on the show. You know, it's interesting to get a lot of insights coming in from CIOs, and that's what we want to do as well. Let's start by talking about how at Bajaj, your focus in terms of your investment DNA, what is the strategy that you all follow? Given that there's so much noise that comes in, at least from the investor front in terms of thematic, core allocation, what is the strategy at Bajaj that you all follow?
Good afternoon, and very happy to be on your show and sharing the views on Bajaj AMC, how we invest here. First of all, as investors, we don't control the outcomes. We actually control the inputs that go into the investments. So an ideal investment team that follows a disciplined investment process, that's what generates alpha over a longer term. In our investment process, we use all the three sources of alpha for generating outperformance. So one of them is information edge, where we study businesses, management, collect the right data and focus on the right data. And as you mentioned, there's so much noise around. You need to filter out the signal from the noise and focus on the right information to make your decisions. The second part is processing that information in the right way. So you can have quantitative models, financial models, analytical models that help you process that information, whether it is about the economic cycle, whether it is about a mega trend, whether it is about company financials or company valuations. And the last part and the most important part or source of alpha is the behavioral edge. People often are driven by narratives and sentiment. We often represent the market like a pendulum, which is swinging between greed and fear. How you react to the output of those models also determines your decision making or how good you can generate your outperformance. So we focus on behavioral edge also, where we are able to understand our own biases and de-bias them and understand the market biases, whether it is greedy or fearful, and then take advantage of that.
Nimesh, so yes, that's important, right? Information too much, but then using the information in the right way, processing that information is key, as well as the behavior, greed and fear. That's also something that plays a big role. So I think you all have a big part in terms of judging that from the investor point of view as well. But Nimesh, when we're talking to a lot of fund houses, sometimes it seems like they lean more towards growth bias, right? How do you balance that growth versus value in terms of allocation when it comes at Bajaj AMC? What is the strategy that you all follow? Because it's not going to be just a short-term thing, right? This works for next 2 years, 3 years. So how do you strategize on that?
So every factor, whether it is growth or value, momentum, low volatility, quality, every factor has its cycles. And you can look at it this way, that at some point of time, each factor can be overpriced or underpriced. Sometimes when people are chasing growth, even growth can be overpriced. Sometimes quality can be overpriced, or sometimes quality, like last year in beginning of 2024, quality was underpriced. So now, instead of having a style bias as a fund house, we create funds with a certain style tilt. So we are not biased towards one style as a house, but there are opportunities that each style gives you, and we try to take advantage of it. So when we believe that market is currently chasing growth, so we focus on that style of investment. Obviously, not growth at any price, but when you get it at the right price. So in a way, we are core investors, or what we can call as GARP investors, growth at a reasonable price. But we don't have a particular style tilt as a fund house, but separate buckets of funds which address a particular factor and stick on to that style.
Nimesh, let's just talk about the recent data that have come in as well from AMFI point of view. SIP flows, when you look at it, they've remained steady. Not much of an uptick, but not a slight bit of the downtick we saw in August. Now, when you look at it in terms of mutual fund returns, in the last 1 year, bit muted versus what we've seen in the last couple of years. So everyone is spoiled with those high returns in the last couple of years. I want to know that, what are we seeing from investors on ground? Is there more comfort now coming in for thematic as well as sector funds? Or, it's more towards those large cap, flexi cap allocation. What is your understanding right now? And does a worry come in terms of flows reducing or SIPs reducing? Because returns may not be as high as one was expecting them to be, especially if it started in the last 1 year.
So let me address this in three parts. So first, we are seeing investors, retail investors, actually become quite mature and evolve. Most of the investors are looking at long-term returns of different asset classes rather than worrying about the short term. I'm not saying it's completely eliminated, but most of the investors are now looking at mutual funds with a long-term perspective. In fact, what we have experienced, especially in the last year, that when market corrects or when there is a dip in the market, the flows actually go up. So people are adding to their exposures when there is a dip. Historically, we used to think that whenever there's a dip in the market, there would be redemptions. So I think that way retail investors have matured quite a bit. Second, we are getting investors from various different aspects of life in terms of various different cities, various different income levels with different goals and aspirations. So there is no one size that fits everybody, but as a core, typically people prefer a flexi cap or a multi cap or a large and mid cap fund. Thematics are used as a additional satellite allocation for most of them. Now, certain long-term themes in India, like for example, consumption, healthcare, BFSI, energy, these long-term and very broad-based thematic funds are also attracting a lot of investors, either coming through SIP or trying to get in at the launch of these funds or at the launch of these themes. That's when I think investors are adding to that satellite allocation. So we are seeing money come across spaces, but most of the large categories like flexi cap and large and mid cap do get the most attention.
Okay, they do get the most attention. Nimesh, just to follow up, we're talking about flexi cap also, which is picking up interest now. And a lot of people are talking about it. So I want to know, is it a wiser way right now to go for maybe a flexi cap fund or a hybrid allocation as well, in case we're looking at more in terms of international side of exposure? Would you say that is a better play right now in this current scenario?
Actually, both address different needs in a way, hybrids as well as flexi cap. Flexi cap is a category where your fund manager has the opportunity to move across market caps and pick up the best of the companies that fit into a particular strategy without much constraints, I would say. When it comes to hybrid, you have to also look at timing the asset allocation between equities, fixed income, either international or sometimes hybrids, which are carrying like multi-asset funds are carrying gold and silver also. So people have to time asset allocations also. Flexi cap are core allocations for equities where you have the best of each of these market cap categories that fit into a fund manager's strategy. Both can address different needs for the investors. Hybrids are typically less volatile compared to flexi caps, but a longer term compounding, the flexi cap category has given, though volatile, but higher returns than the hybrids.
Absolutely, and higher returns at least I know it's a short-term return that I was looking at. 1 year is not something you compare, and past return doesn't always mean that it'll be same. But it's better than even some of these large cap, mid cap side as well, right? So it just becomes tempting. That's why I was asking, is it the best option right now to look at?
So even in these market cap categories, if you see, there is a certain cycle that we go through. If you start measuring from 2017 when mid caps and small caps have peaked, then you will find large caps have actually given a better return. If you take from the bottom of the COVID cycle, you would find that the small caps and mid caps have given better returns. So each of these market cap categories also, because people move like this pendulum between greed and fear, sometimes they get very excited about small caps, sometimes they get very fearful of small caps. So hence, these category shifts also over a longer period of time show up. We did a small study when we looked at 21 years of data with Nifty 50 and NSE Small Cap 100 Index. We found that both had almost similar returns in 20 years. So it was either you chose Nifty or small cap. If you had invested for 20 years, I know very few investors would do that, but for 20 years, the returns are the same. The in between, there are deep cycles in each of them.
Absolutely. 20 years, long time now, right? Given everyone wants everything now at fast returns and everyone wants to retire also by 40 and 50. I don't know how many will be holding for 20 years. But yes, 20-year time period, if you would have looked at it, whether it was Nifty, Nifty small cap, any of those sites, you would have made similar returns. But that's what we're going to be talking about and discussing more with Nimesh as well on the other side. A quick break. We'll understand what trends now we should watch out for going forward as well. All of that after this break. Welcome back to MF Corner on CNBC TV 18. We still have with us Nimesh Chandan, Chief Investment Officer at Bajaj Finserv AMC. Nimesh, now it's time to talk about what to watch out for going forward. I want to know the mega trends that you believe could be India's next decade in terms of wealth creation. And maybe an investor can look at something like that as well, starting now.
So we'll track different mega trends that can impact economies, businesses, and companies. And we try to identify which are the companies that can really benefit from these mega trends, which are the companies that are on the right side of these mega trends so that they have strong tailwinds for growth. So the three areas that, or three mega trends that I would want your audience to think about is consumption, financialization and digitization, and energy. So energy transition and mainly the power sector. So when you come to consumption, I think the time has come for this idea where the structural positives of India in terms of demographics, rising per capita income is being met with a cyclical upturn now that we have seen government reduce taxes, both direct as well as indirect, interest rates coming down, so financing is easier. We are seeing a strong pickup in consumption and starting from the second half of this year. And consumption includes everything from daily groceries up to real estate. So it's a wide theme, and you can actually pick up very good branded businesses which have strong tailwind for growth in rising consumption in India. The second is financialization and digitization, where you see changes in the way people save, the changes in the way people spend, financialization of savings, using digital money or digital payment platforms to spend. So this is another big change which is impacting not only the banking financial sector, but it is also impacting the way people consume and invest. So, and the third is energy transition. You see most of the technology changes that we are seeing now, whether it is AI, whether it is electric vehicles, all these are energy guzzlers. So they actually consume a lot of energy, a lot of power, and hence the world has suddenly seen that we are short of energy and we need to invest more in the power sector. And companies in that chain, whether they are supplying equipment, whether they are in renewable energies, they are all benefiting from this energy transition. So we believe that these are the big themes that will last for a long time. So we see a multi-year theme, as well as they are broad enough for investors to really choose the right companies at the right valuation and bet on them.
Absolutely, interesting theme there, Nimesh, that you mentioned. Consumption, financialization, as well as digitization and energy side. Nimesh, I'm going to pick up in terms of the first two themes that I want to understand, because, we had seen that capex trend that was there for so long. Now that shift may come to consumption as well, given so many boosts that are given by the government. So does it merit maybe now looking at more thematic for consumption funds and even IT side of funds, not going for those old school IT funds, but maybe where newer company investments are coming in, or fintech side of investments. Are those thematic funds a better play right now, and can one look at that?
You are absolutely right. Actually, within consumption, we include these digital platforms also, which actually have, many of them have a strong moat in terms of customer ownership. So consumption is a much broader theme than any other theme. So typically, we advise investors to look at themes which are more broad-based so that the fund managers also have an opportunity to look at across different subsegments and across many companies to select the right ones. When themes are quite narrow, then you see euphoria taking the valuations very high very quickly. And then if there is a disappointment, the theme also collapses very quickly. Consumption is the broadest theme one can bet on. And you are absolutely right. Compared to the other IT companies where we are seeing some kind of headwinds in terms of growth, digital platform, e-commerce companies, app-based companies, quick commerce companies, they are seeing very strong growth and high adoption. So they are having not only high new number of customers joining in, but also the ticket size, the billing size per customer also increasing. So we are quite bullish on this space. In fact, in many of the platform businesses, our funds are invested, and we believe that they have many years of higher growth ahead of them. So this is a theme that we are quite positive on.
Absolutely. Nimesh, a quick one in terms of gold, because that's rising, right? There's no stopping that. And interest for gold ETFs has also increased. Multi-asset allocation funds, because of gold outperforming so well, that's also given them a bit better in terms of return. And the recent announcement that came in by SEBI in terms of REITs, right? How does all this play out for the mutual fund industry, and would we see more investments coming in to REITs from the mutual fund side as well as on the gold front?
So we are positive on precious metals. Actually, a little over a year back, we launched our multi-asset allocation fund because we are seeing that high uncertainties, and especially geopolitics, is leading a lot of people to hedge their portfolio by moving into gold. So we are seeing a good rally in gold, and we benefited from that. But we also midway, so say at the beginning of the calendar, added a bit of silver, because historically silver moves around gold in terms of a certain ratio around gold. And we were seeing that at the beginning of the year, while gold had rallied, silver was yet to move. So we moved some allocation towards silver also. We continue to be positive on both of them. However, after a rally of 2 years, it looks like gold is also poised for a small correction. So one needs to be prepared for a correction, although you can't exactly time it, but one should be prepared that there could be some correction after a very sharp rally. Every asset class has that, and gold historically also has had that. So one should be a bit cautious in terms of now allocating towards gold and silver. Long term, we still believe it is a good play, but albeit there can be a correction.
Okay.
On the REIT and the invest side, there is an opportunity, obviously, in terms of getting better yields many a times, and also participating in growth of some of these REITs and InvITs. So those are areas also we are positive on.
Okay, Nimesh, thank you so much for joining us on the show, giving us insight in terms of what are the trends we could watch out for, how could one look at in terms of investing going forward as well, your thoughts on gold and REITs as well. Thank you so much for joining us on the show, and viewers, thank you so much for tuning in as always. With that, we'll wind down this edition of MF Corner. Up next, we have Closing Bell to take you through the last hour of trade.